begin with Royal Bank of Scotland this hour. It's reported a pre-tax loss of £1.2 billion for the 3 months to September, compared with the £2 billion profit a year earlier. Well, the part nationalised bank has been hit hard by a further £400 million bill to cover claims for mis-sold payment protection insurance, taking the bank's total charges for PPI to £1.7 billion. OK, let's speak to Chris Roebuck, an expert in international banking. Chris, good to see you. How badly has this bill for PPI mis-selling affected a bank the size of RBS?
Well, it certainly hasn't helped. Times are tough for banks. In fact, times are tough for all organisations. And what all organisations are having to do, be they banks or other organisations, is look at the businesses they're in, look at where they're making money, and effectively cut out those businesses that prior to the financial crisis made them money because times were good, but now times are tough, are actually not making the money they need.
But what
in addition, I mean, obviously the banks as well have additional issues in terms of increased regulation. They have additional issues in terms of having to keep more money for a rainy day, so to speak. So this just does not help.
What other factors would you say they contributed to this overall pre-tax loss of £1.26 billion? It surely can't all be down to PPI mis-selling.
Oh, no, it's not all down to PPI. And if you look across the whole banking sector, there are a significant number or a significant percentage of the global banks who are not doing particularly well, who are either making less profit than they did before or actually making a loss. The problem is that the banks are having a tough time economically, as indeed is everyone else. What we're also seeing is they're being kept under pressure by the public and politicians, primarily because we are still having evidence coming out of misbehaviour that occurred before the financial crisis. So what the banks are trying to do is they're trying to improve their culture, make their systems more efficient and focus on the businesses that earn the money, at the same time that evidence is coming out of bad behaviour from the past, which isn't helping them in terms of their image at all.
We're talking about bad behaviour. Only yesterday, of course, we also had Lloyds announcing that it's putting aside an extra £1 billion for the mis-selling of PPI claims, taking the total bill now for the UK banks for PPI mis-selling to £10.8 billion. How big would you say this scandal has been for the banks, and have the lessons been learned?
I think it's certainly been a big scandal. There's two elements to the scandal. There's the element of the mis-selling, which is the technical element, and there's also the element of the culture, which is how on earth did these institutions encourage their people to do things that were actually wrong? So there is a leadership issue there. They can sort out the legal issue, but there is a clear leadership issue in the banks, not just British banks, but banks around the world, where the leaders at the top need to make clear that no longer is it make money at all costs as long as it's not illegal, but it's about making money in an ethical way that helps your clients prosper at the same time. And that's the old way that banks used to work, particularly in the City of London before the Big Bang. And they need to get back to that principled approach to banking around the world.
Chris Roebuck, many thanks.
Thank you.
OK, let's get a quick flash now, if we can, of the markets this